What's up, traders? Hope you had a great weekend. After nursing those weekend scars from Friday's distribution dump that shredded support levels, markets wasted no time today, serving up a classic half retracement rally that had tech and small caps leading the charge right out of the gate. With Trump dialing back the China tariff heat and no econ curveballs to spoil the party, it felt like buyers were finally exhaling. But is this the floor or just a head fake?
Always the question, isn't it?
You're locked in to the Stock Market Summary Series. And just remember, none of this is buying or selling advice. We're just here to provide market commentary, but nothing we say here is financial advice.
Right, just commentary.
Hopefully you guys know that by now, but we got to set the rules of the road. Okay, let's get into it. We spent the weekend sifting through the charts and looking for confirmation that today's jump is actually real.
It was definitely a flip the script session today. I mean, especially considering that brutal Friday crater. Remember the SPY just punching right through its 20-day moving average?
Oh, yeah, on absolutely massive distribution volume, too.
Yeah. Exactly. So today, well, we clawed back more than half that damage. A pretty hard bounce.
We did, yeah, SPY up, what, 1.53%?
Yeah.
Reclaiming some ground?
Yeah.
But we did it on significantly lighter volume than Friday. That's kind of the contradiction here, isn't it?
That is the critical observation, absolutely. You rally hard, sure, but the light volume, it makes you wonder.
Makes me wonder if it's just buyers dipping in for perceived value, not real institutional conviction yet.
Or maybe professional sellers are just waiting a bit higher up, for a better spot to distribute again. Makes you think if this reversal is maybe short-lived.
Could be. Although you'd think if sellers were totally in charge, we'd have seen more downside follow-through this morning, right?
That's a fair point. And that's maybe why the leadership today is so telling. Look at the QQQ.
Roaring back, up 2.12%. Tech was strong.
Driven by AI chips, Broadcom was lighting things up. But the real star, I thought, was IWM, small caps.
Yeah, stealing the show. Up, what, 2.78%?
Almost 2.8%. And the IWM's move is really critical because it's flirting with that make-or-break $245 pivot point.
Right, that upper boundary of the consolidation rate.
Exactly. It's not just some random number. A solid close above that.
Yeah.
Well, that tells us the small cap rotation might actually be back on. More risk appetite.
And the sector split sort of confirms that feeling, doesn't it? Tech, XOK leading the charge, up 2.44%.
And naturally, consumer staples, XLP, lagged, finished down 0.33%.
So the safety crowd was maybe taking some profits there.
Seems like it. Okay, diving into specific stocks, a couple of interesting technical standouts today.
Like Big Bear AI, BBAI, that broke out on pretty good volume. Lots of hype in AI right now.
Yeah, that one definitely caught my eye. And then there's NewScale Power, SMR. That was almost a textbook setup.
The symmetrical triangle breakout.
Exactly. Just barely closed above its downward resistance trend line. Now, given that name has a really high short float.
Ah, okay. So potential for a squeeze.
Right. We know these high short float names can make some impulsive, aggressive moves, up or down.
They absolutely can. And, when you're looking at a potential squeeze like that, discipline is everything.
Yeah.
You don't manage that kind of volatility by just hoping.
No way.
You need those crucial risk caps set before things get wild. It's that blend of spotting the pattern, but having the protective mechanics ready. That's foundational stuff we really drill down on in the Grok Trade mentorship, managing that risk.
It's essential.
As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode.
Yeah, let us know.
And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe, too, so you don't miss a beat. You can always unsubscribe later. Okay, let's widen the lens for a sec.
Sure. Well, economic news was pretty light today, honestly. Felt like the market was mostly technically driven.
Not many headlines moving the needle.
Nope. Still navigating that sort of ongoing government shutdown fog, too, which just adds noise to the charts. But we did get one slight positive update from NABE, the National Association for Business Economics.
Oh, yeah. What'd they say?
They actually bumped their 2025 GDP forecast up a bit, from 1.3% to 1.8%. So some cautious optimism there, even though they still see inflation sticking above that 2% target.
Okay, interesting.
And meanwhile, metals. Wow.
Flight to safety still strong there.
You could say that.
Yeah.
Gold extended its gains up another 2.43% to fresh records. And silver really ripped today. Surged 4.03%. They're really acting like that debasement hedge, shining bright amidst all this equity whiplash.
Definitely providing some diversification benefits lately. So, bringing it back to trading. Those breakouts we mentioned, BBAI and SMR,
Right. There are really prime examples of the kinds of setups we focus on dissecting in the Grok Trade mentorship program.
Not just about chasing hot tickers, right?
Not at all. It's about blending that pattern spotting, confirming with volume, but crucially, setting those predefined risk caps. That's what the one-on-one coaching focuses on.
Helping traders build that instinct, that consistency.
Exactly. The goal is straightforward. Help you forge that bulletproof instinct, starting by recouping the initial investment and then building real sustainable consistency.
Makes sense. All right, well, we'll keep watching those pivots, especially that $245 level on the IWM. That seems key for the near term.
Definitely one to watch this week.
Okay, folks, that's the summary for today. Wish you a great rest of the day, and we'll catch you in tomorrow's market summary.
Take care.